Hi, Robert. Good afternoon. Can you hear me? Brian, good afternoon. How are you? Can you hear me?
Hello.
Hello. Hi, Brian.
Hi, I can hear you. Let me just sort my video.
All
Moment.
right. Okay. Thank you for that. Robert, can you hear me? Hi,
Okay, can you hear me?
Robert.
Hi, I am so sorry. I
Yes.
am in Mombasa and there was a blackout. That's
Oh,
that's why
yeah.
yeah, I'm so sorry about that.
It's fine. It's fine. You understand. It was a national blackout, actually.
Oh, just that blip that we had a few minutes ago.
Yeah, it also flickered here.
Oh, okay. My apologies. Oh
Yes.
my.
Yes. It's fine. It's fine. Welcome, and thank you for joining us. We just want to give
Okay.
Brian a few minutes. He's
Okay.
sorting his camera because we
Okay.
want to be seen, want to be live, all of us.
Okay.
But meanwhile,
Fine.
let me take the opportunity to welcome our participants for today. So, dear participants, welcome to today's session on our voluntary tax disclosure program. We are going to discuss core issues, and I'll give even you a chance to ask questions live to us. But for now, I can just request that if possible, you can tell a friend to tell a friend, share the link with your friends so that they can join us for this afternoon session on voluntary tax disclosure program. And if you might be having queries, meanwhile, you can also be posting them as we wait for one of our panelists to sort an issue he has with his camera. So we'll give us a few minutes so that Brand can connect, and then we'll begin our session. Thank you. Brian, are you okay now? Mm. Two. Okay. As we wait for Brian to get his connection back, our dear participants, for those who are joining us, thank you for taking your time to participate in this very necessary engagement on our voluntary tax disclosure program. So we are asking for a few minutes kindly because we have one of our panelists who is experiencing a challenge in logging in. But thank you. I can see your questions have started coming in through the chat. It's an engagement which is live, and we want to make it as interactive as possible. So feel free to ask your questions, and I'll be pleased to take questions, more so those that are related to our topic of discussion, which is a voluntary tax disclosure program. Yes, I know we might be having so many other questions, which we might address depending on how time will allow us. But I'd prefer that if we have pressing questions or comments on voluntary tax disclosure program, we bring them out first, and then you can address the rest of the questions as time goes by. So let me see if Brian is on. Remember. Okay. Hello, Brian. Are you okay now? Brian? Okay, he seemed to still have a challenge. So meanwhile, we can be catching up with one of our panelists, Mr. Robert. Thank you for taking your time to join us this afternoon, all the way from Mombasa. It's a pleasure. So you can maybe tell us something about yourself, maybe introduce yourself to our participants as we go by. The floor is yours.
Thank you. Thank you very much, Cynthia, and good afternoon, everyone. I see we've got about 41 participants so far, and we certainly look forward to more. Cynthia, just confirm that you can hear me loud and clear.
Very clear.
Excellent. Thank you very much.
Yes.
So, ladies and gentlemen, my name is Robert Wariro, FCPA Robert Wariro. I'm currently in Mombasa, so please excuse me for my background. I'm just attending the annual convention here. So, very happy to be on board here to discuss about the voluntary tax disclosure. I hope we can have most, if not all of you, considering the voluntary tax disclosure. My background is law. I'm a lawyer, I'm an advocate of the High Court, but I'm also a fellow of the Institute of Certified Public Accountants. And I've done tax this is my 19th year now doing tax. Currently, I run a tax practice by the name Ichiban, Tax and Business Advisory, where we are in terms of X matters. So karibuni sana. I'm very happy that you made time for this session. Thank you. Back to you, Cynthia.
Awesome. Wow, 19 years. Thank you. So, dear participants, as you can hear, we have a wealth of knowledge here. So, he's going to decode for us some of the things maybe that you may not be very familiar with, or a misconception, or somewhere where we might not be having clear knowledge on a voluntary tax disclosure program. So, feel free to ask any questions, and we'll be open to answer them. So let me just hear if Brian is on call. Brian? Okay, so I think we'll just begin. Brian will catch us on the way. So Robert, I'll just go straight to the very, very basics. Let's just start to understand what is this program, what is Voluntary Tax Disclosure Program, and why was it necessary for KRA to bring on board such a program?
Thank you. Thank you very much for that question, Cynthia. And that's a good question, really, to start this conversation.
Yeah.
The reason why I'm saying it's a good conversation starter is because Kenya operates what we call a self-assessment regime, tax regime. That Robert, I'm making let's say, this is how much money I have made. This is how much tax is due on profit that I have on. It's the same way that your employer, if you are employed, says Robert is earning 50,000 shillings. So this is how much you are declaring. So it's a self-assessment regime. And because of that, and you'll be aware that there are about 7 or so million registered taxpayers, it is impossible for Revenue Authority to keep following everyone. And that's the reason why they came up with this voluntary tax disclosure. And the idea is this: if for any reason you had any undisclosed tax liabilities, and we'll be going into a bit more detail around the period, but if for any reason you have any undisclosed tax liabilities, you have income which you never paid tax on, then we're giving you this opportunity as a government or as Revenue Authority to make a full disclosure of revenues, pay the tax that is associated with those revenues, and then we will waive the penalties and interest. Because you see, if you don't pay your taxes on time, there are penalties and interest that accrue. So the voluntary tax disclosure program is designed to encourage taxpayers to voluntarily disclose any taxes that they hadn't paid in the past. Commissioner takes that declaration, accepts the principal tax, and then waives a portion of the interest, as we shall discuss later on. And this is good for perhaps for us to contextualize where this is coming from. Kenya has had about 4 voluntary disclosure programs, and I think one of the most successful was the 2003 tax amnesty, just when the new administration came to place. And what we realized, or what government realized from that exercise, was that a lot of people are actually willing to pay their taxes, particularly if these taxes are used well. So a lot of people are willing to pay their taxes. So this is why this amnesty was brought in, and it's really an opportunity for anybody who thinks they have any taxes that they haven't used. Yeah?
Thank you, Robert, for that very, very elaborate introduction to what this voluntary tax disclosure program is all about. And like you rightly put it, it's a program where KRA sort of extends an olive branch to taxpayers who had not disclosed their taxes to the commissioner for purposes of getting some remissions. So you've said it's open to anybody. So by anybody, maybe you can elaborate to us. Is it open to just anybody, even foreigners? Who's this anybody in this case? If you can just elaborate on who is eligible for this program.
Okay, yes, that's a good question as well. So it actually says that the law talks about the word any person, so which means it could be a company, it could be an individual, it could be a partnership, it could be any sort of taxpayer known to Revenue Authority, and even unknown to Revenue Authority. So the idea here is this: even if you are a foreigner who is living in Kenya but has earned some income and you want to disclose, then you also qualify. If you're a Kenyan, for example, living out there in the diaspora, and you want to qualify, you want to say, for example, disclose certain rental income that you have not been disclosing, then you also qualify. So broadly speaking, it is anybody who has got any tax obligation that meet certain qualifying criteria. And I know we'll be discussing, Cynthia will be discussing some of that criteria,
Sure.
but it is anybody who has got or who thinks they have a tax obligation. So there's no limitation in terms of whether you're a foreign company, whether you're a person in the diaspora, whether you're a Kenyan, whether you're a small business, big business. It is anybody who has got any tax liability.
Yes,
Cynthia?
that's very true. Thank you. Thank you for that. I can see Brian is back on call. Brian? Hello, Brian. Can you hear me? Okay. All right. It seems he's still having a challenge. We'll just proceed, FCPA Robert, if you don't mind. So so you've said it's open to anyone, and if you can elaborate further on the periods which this program covers, because you understand, for example, if I had my undisclosed rental income from 1990, for example, will I still be eligible to be covered under this program, or which period exactly are we talking about?
Okay.
Yes.
So that's also a fantastic question, Cynthia, for two reasons.
Yes.
One is the law, and maybe just I know we're not going to get very technical, but just for purposes of our panel, our listeners, yes,
Yes.
it's important to just understand the legal basis of this. So this amnesty came in the year 2020. It was actually incorporated in Section 37D of the Tax Procedures Act in 2020, and then it had an effective date of 1st January 2021.
Sorry, Robert, you seem to have lost you. Hello, Robert, can you hear me? We seem to have lost you, Robert.
Sorry about that. We
Oh,
had
all right.
we had a power cut over here as
It's
well.
the blackout. Okay.
Yes, so sorry about that.
Sure. All right.
So what I was saying is that that law came into force on 1st January 2021, and it essentially structured how the VDP or VTDP voluntary tax disclosure program is going to work. And this is how it was structured. One, it covers the period 2015 to, that is July 2015 to June 2020, which is 5 years. So if you've got any undisclosed income between July 2015 and June 2020, then that is a period that is covered by the amnesty. And somebody may ask why that period? It is because under the Tax Procedures Act, KRA can only audit you for up to 5 years from the date that you filed a return. So for example, if you're talking about a VAT return that you're filing for the month of October 2022, which is to be filed on 20th of November, then KRA can only go backwards 5 years from 20th of November to audit you, which means, for example, 2016 would definitely be out of scope. Now, that's the reason why the amnesty was designed for 5 years. And this is an interesting one because we've had taxpayers come to us and say, look, I want to do the voluntary disclosure and I want to do for December 2015. You can disclose it, but it's KRA cannot audit that period because it's out of time. This, Cynthia, for our listeners, that
Sure.
even though the law says KRA cannot audit you beyond 5 years, in fraud, then that 5-year limitation does not apply. And so, to your example of 1990, if KRA for any reason thought that, then they can audit me up to 1990. So to answer your question, the audit, the VDP applies for the period July 2015 to June 2020. Okay.
Thank you, FCPA Robert, for that. Brian is back on. We apologize for that mishap. Brian, good afternoon.
afternoon, Cynthia. Good afternoon, Robert. Viewers.
Brian?
Yes, thank you for making it here, and glad people will be able to learn about this very crucial amnesty through the tax disclosure program. I believe Wakili has delved into most of the introduction parts, and what I can just say is that this is a very good amnesty program, and as we go on, I would like to hear more, or I would like to hear what the populace thinks about this program, or if there are any issues or any questions that may arise out of this discussion, we will be able to answer them accordingly. Thank you.
Thank you, Brian. Though we can't see you, but we appreciate for joining us on call. Maybe before we dive further, you can introduce yourself to the participants so that they can get to understand who Brian is, where he works, what he loves doing. So maybe I can give you the floor so that you can introduce yourself to us.
Okay, my name is Brian Korir, lawyer, officer, KRA Bungoma Station. I primarily work in policy and tax advisory. In my line of work, mostly we deal with issues, legal, technical, or any other issue that a taxpayer might come to ask about, mostly if the issues are technical in nature. Thank you.
Thank you, Brian. So, dear participants, as you can hear, we are joined from Mombasa and all the way from Bungoma. So from all over the country, and I'm in Nairobi. So we are having the face of Kenya, sort of, on our call this afternoon. So thank you, Brian. And I think I will give you a question right away from these questions. We picked some from the frequently asked questions on our social media pages, and also we incorporated with some of the information that we think is necessary for the public to understand. So, Brian, maybe you can elaborate to us. Wakili FCPA Robert has told us that the amnesty will cover the 5-year period. But how long will this program run? Maybe you can give us the difference. So it will cover up to 5 years, but how long will this program run? Do you expect it to end soon, or is this amnesty going to last forever? And additional to that is that you can also emphasize or give us the rates that you're looking at for this year and going forward, if it's going to last forever or if it's going to end, how will the rates be in the near future? Brian?
Okay, thank you, Cynthia, once again. This program was effective 1st of January 2021. Wakili has talked about the period that are covered under this program, that is from 2020, 2015. But if you want to enjoy relief under this program, you should be very clear on this. Only covers 1st of January 2021 to December 31st, 2023. And the reliefs that, or rather the remission, are dependent on the application of the taxpayer. Which year did you apply? For the first period, talk about 2022. If you applied the VTDP in the year 2022, you'll enjoy a relief of 100% on penalties and interest that arise from you paying the principal tax. You see, the keyword is paying. For you to enjoy this relief, you have to pay the taxes thereof. And for the second year, let's say if you pay in the year 2022, you will enjoy a remission of 50% once you've cleared the principal tax. 50% remission on penalties and interest. And if you apply for the VTDP in the, so let's say in the year 2023, and you pay the taxes that are resulting, you will enjoy a 25% relief thereafter.
Okay, thank you, Brian, for that. Maybe you can just elaborate. You've said if I apply for the amnesty, if I applied, let's say for those who applied in the year 2021, they enjoyed 100% relief. For those who will apply this year, 2022, they will enjoy 50%. And those who will apply next year, 2023, they will enjoy 25% of the 25% remission on the penalties and interest that would have accrued. So what if I applied in the year 2021, but up until the year 2022, like you've emphasized, I've not paid, I've not done the payment for the principal tax, because what you're getting a remission on is on the penalties and the interest, but not on the principal tax, if I got you right. Maybe you can just emphasize to us that the payment bit, if I applied for the program in the year 2021, but I've not finished according to my payment plan, I've not finished maybe paying up to this year, what percentage of relief am I going to enjoy?
Okay, to our esteemed taxpayers, they should understand that this arrangement is a very unique one. It's a poor kind of arrangement. You scratch my back, I scratch yours. So the catch here is for you to enjoy relief. There's no if and buts and maybes. You have to clear the principal tax. If not, the commissioner is at liberty to end the arrangement. Yes?
Yeah.
If you don't pay the full amount, the commissioner is at liberty to end the arrangement. I think that's it.
All right. Thank you, Brian, for that. Our dear participants have, as Brian has put it, it is important that after making the application, you follow up with making up the payment, because it's up until you've done the payment is when you'll start enjoying that remission. And just to put the emphasis, we are in the second year where the remission is at, the amnesty is at 50%. Those who did last year, and if I can just read out some interesting statistics that we have, last year, that is the year 2021, we had about 6,690 applications that were done for voluntary tax disclosure program. And from all these applications, the payments that were done, the amount was coming to about 5.9 billion. So you can see we had quite a number that took advantage of this program in last year, 2021. And we were able also, as the sole revenue collecting agency, we were able to collect about 5.9 billion from the taxes that were disclosed to the commissioner. So you can see that's a good statistic. For this year, we are yet to receive that, but I would like to encourage our participants, if you have any undisclosed taxes that you'd like to make that you'd like to disclose to the commissioner, you can take advantage of this year when we have the remissions at 50%, because as Brian has said, if we wait until next year, the remissions will go further below to 25%. Okay, so I'll come to you, FCPA Robert. You have clarified to us who exactly qualifies for this program. Maybe you can also elaborate to us which taxes are covered under this program. Are there any exemptions on the taxes? Is there a limit to what I can disclose? You can maybe give us an in-depth look at what taxes are covered under this program.
Thank you very much for that question, Cynthia. So that's a good one as well, because like you said, you refer to KRA as the sole revenue collecting agency in this country. And so Revenue Authority collects certain taxes and certain levies on behalf of statutory bodies, things like National Industrial Training Authority levies, Kenya airport taxes, and the Kenya Civil Aviation Act and things like that. So it's important that we clarify which taxes we are talking about. The taxes that are covered under this amnesty are the ones that are administered under the Tax Procedures Act. Remember, this amnesty came in under Section 37D, 37 Delta of the Tax Procedures Act. And so it covers taxes that are administered under that act. And so the question would be, which taxes are these? So you're talking about income tax, for example, company income tax. You're talking about personal income tax or PAYE. You're talking about withholding taxes. You're talking about VAT. You're talking about withholding VAT because some may have a withholding VAT obligation, and monthly rental income tax as well. So by and large, those are the ones that are covered. However, because Revenue Authority, you see, I could have imported something for customs duty purposes, and I pay the customs duty, and I realize that I made a wrong declaration. Whilst that is not specifically covered in the Section 37D in terms of the tax heads, nothing stops a taxpayer from disclosing that tax to the commissioner, and then it becomes a question of discussing with the commissioner, why don't we cover this as part of the amnesty? But strictly speaking, it is the taxes that are administered under the Tax Procedures Act that would qualify for that exemption. So that, for example, if you've got NITA remittances or maybe, I don't know, NHF and NSSF, those ones are not covered. It's not part of the amnesty. Cynthia?
Thank you. Thank you, Robert, for that clarification. So we've learned that there are those taxes, as Robert has mentioned, for example, like payee or rental income, those income taxes that are covered under this program. So Brian, you can maybe take us through the application process, because now we understand if you are covered under this program. For example, I have undisclosed taxes on MRI, monthly rental income. How do I go about applying for this program? How can I get this 50% amnesty? If you can maybe break it down on a step-by-step basis so that our participants can be able to understand, so that they don't all get confused when they get into the process.
Okay, this process is quite simple and elaborate, and this can be done on our system, the iTax platform. For those of you who are outside there, you have a public portal where you can sort your tax issues online. I believe everyone has a PIN and a password, and that's how we log in. So the first step is obviously you log in into the iTax portal using your PIN and password. While you are at it, you click on the return menu and select voluntary tax disclosure program. If you have ever interacted with your system, once you navigate through the return menu, just drop it down. You'll be able to see the feature of a voluntary tax disclosure program. Okay, the second step, you have to select the obligation you wish to file under VTDP. As Wakili has covered it, the obligations that are covered under this program, if you drop it down, they're well listed. They're under. The third, you just click on the next button. It should be able to take you to the next step. So you should be able to capture the return period that you want to apply this VTDP. So the return period, Wakili has talked about it. It's between 2015 and 2020. It should be between 2015 and 2020. So capture the return period under disclosure, and you upload the relevant supporting document under section A. The fifth step, you should be able to see section B. Capture the undeclared turnover, undeclared expenses, and undeclared gross amounts, and submit the applications. So once you've been able to submit the application, the system will generate an acknowledgement slip, and a verification task will be created at the respective TSO. So the verification task is TSO specific. So let's say if you're in Mombasa, you've applied for the VTDP and you're a registered taxpayer in Mombasa, any TSO in Mombasa County should be able to assist you. Alternatively, the same acknowledgement receipt will be sent through your registered mail, through your registered email rather. The seventh step is that upon approval or rejection of the application, because this application you're making is subject to the facts and figures being put under consideration by the commissioner, so it can either be rejected or approved. So upon approval or rejection of the application, the applicant will receive rather a notice either approving or rejecting the application. So for approved cases, the taxpayer shall generate a payment slip as per the filed VTDP return and make the payments accordingly. A VTDP certificate will thereby be issued to the applicant upon payment. So for those of you who have complied with the payments, you'll be issued with the VTDP certificate. That's the process. Thank you.
Wow, thank you, Brian, for that. I wish we could have a means of projecting it so that we just get the step by step on this call. But you've been very clear. You have to
Just a moment.
Sure.
Yeah. For those of us who would love to see the diagrammatic presentation, I think our website has it step by step.
All right.
Yes. They can just visit our website so that they can get a clear picture of what I'm saying.
Thank you. Thank you for that clarification, Brian. So, dear participants, as Brian has put it, we have a step-by-step guide on how you can do your voluntary tax disclosure program application on our website. So, but he has clearly put it, it's a step-by-step, it's a simplified process. You don't need FCPA Robert to assist you with the process. But I'm not saying you cannot go to him, but you can seek for his services. But we also have a step-by-step guide on our website where you can just go and then you can be able to see the guidelines on how you can apply for the program. And maybe, Brian, before as we dive more into that question, what are some of the circumstances maybe that can lead to my application being rejected? You've told us, yes, it covers maybe the 5-year period. That could be one of the reasons, maybe that maybe my application is outside the period that's being covered. But what other things can lead to my application being rejected?
Okay, thank you again, Cynthia.
Yes.
Wakili talked about this amnesty being anchored on Section 37D of the Tax Procedures Act. So some of the reasons why we, as the commissioners representatives, we can rather reject an application if the taxpayer is under audit. Second one, if the taxpayer is under any compliance check of any nature. The third one is if we suspect that you've been involved in fraud, you automatically get the rejection. The fourth, if you have any litigation processes that you are involved in, mostly tax processes, if you've been prosecuted in court, that can lead your application to be rejected. Yes.
Okay. That's quite informative. Thank you for citing those reasons to us. And also another question on still on the application process. Suppose I do my returns, the application, the VDTP, and I do the return, and I find out that maybe there are some things maybe I have not declared correctly. Can I go back and amend the return, or is once I've declared that is it? Is there a provision for me to amend my returns?
Yes, the returns, the VTDP returns can be amended once at a time. However, the return should not put the taxpayer in a credit position, because that will be defeating the purpose of disclosure and payment of principal tax. So the taxpayer should file, or rather make the amendments to the return, but it should not put him or her or a company under a credit position or a refund position, let me say so.
So there are no refunds on this program. Okay, that's interesting. Thank you for that. Let me go to you, FCPA Robert, and maybe you can elaborate to us. Brian has said about being, if maybe you are under audit or something, your application can be rejected. So maybe if you can elaborate to us, let's say a person has been a person granted relief under this program shall not be prosecuted on the same set of facts in respect of the fully disclosed and paid taxes. What do you mean by this person who has already been granted relief under this program will not be prosecuted? What can you tell us about that? Should I worry about disclosing? Will KRA come after the taxpayer? Or you can give us an in-depth look at this condition. If I'm able to disclose my taxes to the commissioner, will I be prosecuted on the same set of facts that I've already disclosed and also made payment for those taxes? Robert? Robert, you seem to have lost you. Maybe it's the lights that are flickering again. Hello, Robert, can you hear us? All right, as we wait for the reconnection maybe from Robert, Brian, maybe we can go on with the oh, he's back. Thank you, Robert. We understand.
Wow, I have never experienced anything like this. It keeps. I'm so sorry. I really apologize for
We
participants, but
understand.
I'll try. Yeah.
Sorry about that, but we understand. I don't know if you got my question.
No, I did it, unfortunately.
All right. So the question is, a taxpayer who has disclosed their taxes, their unpaid taxes to the commissioner and has been granted the relief. We are saying that they will not be prosecuted. KRA will not come after them. I want you to give the assurance that this is true, so that because you are the wakili, you've seen such cases. Have we prosecuted anyone who has disclosed the unpaid taxes to the commissioner?
Okay, that's a good question, and yes, though I don't hold brief for KRA, I am here to confirm, like Council is saying, Brian is saying.
I think we've lost Robert again. Okay. Maybe you can give our FCPA Robert a few minutes again to reconnect. Kindly bear with us. I think we are having a countrywide fluctuation of electricity. So kindly bear with us. Robert, good to see you back.
What I'll try and do, let me also just, if you don't mind, I'll try and go off video so that we see whether that also stabilizes the signal.
Sure.
Okay. Yes, so I was saying that for as long as you've made a full disclosure, then under the law is quite clear, Section 37D, the commissioner cannot prosecute you. And in fact, to ensure that the matter has come to an end, even you as a taxpayer, once you've made that disclosure, then you're not allowed to reopen the issue. You cannot say that, oh, I am now appealing, I disagree with KRA, and now I am going to appeal that decision. No. We want to bring it to a close. So the same way that the commissioner has to bring it to a close, even you as a taxpayer, you bring the issue to a close. So you draw a line in the sand and you say, let us continue complying on a go-forward basis. Cynthia?
Thank you. I think you are quite clear with the video off, but I wish we would have done both concurrently, but it's fine. So thank you for that elaboration. I think I'd seen a similar question that had popped up on the chat with regards to being prosecuted after disclosing. I think that's clear, but maybe I'll go back to that chat question and I'll ask it in a few minutes from now. Brian, still on the application and the payment bit, maybe you can just clarify to us because it was a question that was frequently asked by our taxpayers on social media. If I'm not able to make this payment, one of the principal tax, because you have to make payment of the principal tax to enjoy the relief. So if I'm not able to make this payment at once, is there like a plan, or how can KRA help me, or how can I reach an agreement with KRA so that I clear maybe in bits, or how can I go about it to make this payment if a taxpayer is not able to do it one-off?
Okay, Cynthia, one of our core values as KRA, we're always helpful, and we take the cognizance of the fact that Kenyans at this time facing hard economic times, and even our procedures and manuals allow for payment. So yes, we can sit with the commissioner and make arrangements in terms of our payment plan. However, it should be within the year under which taxpayers made an application. So let's say if it's 2022, the law provides for at least 6 months. So let's say if you have applied in January, you can make an arrangement to pay by in bits. If you, let's say, applied in December of 2022, it still falls under the year which the relief is being sought. You can always spill it over to the next year, provided that we reach a compromise and the tax is paid in. And also the taxpayer should also know that defaulting the payment plan comes with repercussions. And I just urge them, once you've applied for a payment plan, or rather you've been given a payment plan by the commissioner, always fulfill the end of your bargain. Thanks.
Okay, thank you, Brian, for that. So, like you've rightly put, we are very helpful. If you're not able to make a one-off payment, you can actually agree with the commissioner on a payment plan that you can manage, because times are hard, but then we must also do the right thing. Also, it was also a call by His Excellency our President that all of us must pull our weight in paying our taxes so that we can even enjoy the benefits that come with payment of taxes. So FCPA Robert, maybe I can come back to you as we wind up. Maybe you can give us, being the voice of the public, you can maybe give us your views. What could be maybe some of the challenges that maybe citizens or Kenyans are experiencing when it comes to applying for this program, or what is the feedback, or what is the public saying? You can give us maybe a feel, since you're now from industry. You can give us maybe if there are any challenges that have been reported so far about this VTDP program. Robert?
Cynthia, again, I had dropped off.
Sorry
I'm
about
so
that.
sorry. Yes. So, did you have a question?
Yes. And the question would be, being the voice of the public, maybe you can give us your views on maybe what the challenges might have been, or what the challenges are in the public or in the industry, because VTDP is we are now in the second year, so it's not very new, it's not very old. So we could be experiencing teething problems, challenges here and there for those maybe who've heard about it this year. So what is the feedback maybe that we can take from industry about this program?
That's a fantastic question, Cynthia. And the reason why I say it's fantastic is because even that tax conference that we have for ISPAC, one of the issues that we have that has come out clearly and consistently is that tax in this country is complex. And you can see even some of the questions that are being raised on the chat. Somebody says that why can't we get a waiver of the nil filing return penalties? Because at the end of the day, if I didn't have any income to disclose and you still want to penalize me 2,000 shillings, and I didn't even know, we need to simplify tax in this country. That's number one. Number two, I think that there are very many changes that happen regularly, so that I'm not aware that there's a certain law that has changed, and therefore I have a tax obligation to comply with. And I think this will be cured by what we've had the new administration talking about, not changing the taxes every year, so that once you have a tax law in place or a tax provision, then at least it stays for maybe 4 or 5 years before you change it, and therefore it becomes a bit more um, uh, understandable and perhaps even easier to comply with. And then the third one, and I appreciate that for you guys it must be quite hard as KRA. Let's face it. You guys are nice guys. However, we have taxpayers out here who have had very bad experiences with KRA. Perhaps even if I owe taxes, tell me in a nice way without threatening me, without issuing agency notices and those kind of things, so that at the end of the day, I know it's my obligation to pay taxes, but can we please just have it done in a humane manner, in a way that we can sit down. I agree, I owe you 100, but I can only pay you 20. So allow me to pay you 20 until I finish paying. That kind of an approach to tax administration, which again has featured quite prominently in this tax convention that we're having. So I think, Cynthia, those are the key issues. And for the participants, I hasten to add that sometimes KRA, they are the messengers. So we might want to hammer them a lot, but the truth of the matter is that this country needs tax revenues, and some taxpayers also are not willing to comply, or they're not willing to do their part. So sometimes the Revenue Authority resorts to these very tough measures. But I think for those who are challenging, Revenue Authority can deal with them. But for the rest of us who are complying and who are willing to comply, then let's have a conversation so that it becomes easier for all of us to administer taxes. That's what I would say, Cynthia.
Wow, quite some feedback there. Thank you for that, FCPA Robert. Quite informative, and we've taken note. I think after this call, we will prepare a report which we shall forward to our management with all the feedback that you're getting from this session. So thank you very much for that, and for echoing His Excellency the Deputy President's call for us to go slow on our taxpayers who are actually willing to pay their fair share of taxes, because without taxes, as Wakili has put it, we cannot actually run our country. The government cannot run without money. So it's important that we do a fair share of payment of taxes, even as we anticipate to get better services that come with it. So maybe as we close, Brian, you can tell us what the experience has been with the applications that have been done for VTDP. What are some of the benefits that have come along with this program? Maybe we can elaborate that to our participants before we move into the chat to get the feedback.
Of course, the most obvious one, the taxpayers benefited because once you pay the starting principal tax under this program, you get a remission, be it on a reducing balance. But if you did it on the first year, you get 100% remission. So, of course, punitive tax, let's say punitive penalties and interest been limited to the taxpayer. And it's also, again, for the authority, because people who had previously not declared their, let's say, their income have come on board. And as a result, we're having a wider tax base. We have casted our nets wider, therefore increasing the level of compliance in this country. So those are some of the benefits I think this program has brought about.
Thank you, Brian, for that. And with that, I can see we are almost covering an hour, which was our intended time. And I'd like to go straight to our chat. I'm sure my fellow panelists will be able to see them. But let me just take the lead role in reading them out, some of the feedback. We have one from Rosie who's saying, I think many people are scared of exposing themselves by doing voluntary disclosure. Is there a possibility of opening doors to an in-depth investigation after doing voluntary disclosure? I think that's one of the things that FCP Robert handled, but just to reassure Rosie, Robert, I can give you this to handle. Is there any possibility that we'll be opening doors to an in-depth investigation after doing voluntary disclosure?
No, there is no possibility, because for as long as you've done a full disclosure and you have submitted that disclosure to the commissioner, and the commissioner has reviewed it and agreed, is satisfied. Actually, the law uses the word satisfied. Is satisfied with it, because obviously you've given the information supporting the disclosure, then that closes it, and that is the end of it. In fact, you will get a letter from the commissioner saying we have looked at it and we're happy, and that is the end of the matter. However, Rosie, it's important to point out that once you now disclose, then obviously the commissioner will know that you are a taxpayer, and that going forward, if you've got rental income, the expectation is that you'll pay in the following years, which really is the objective of this voluntary disclosure program, to bring in more taxpayers, to expand the number of taxpayers in this country. So it just means that once you disclose, then going forward, like I've seen a comment here from somebody saying that now they are a responsible taxpayer. That really is what the government is after.
Sure. Thank you, FCP Robert, for that. Rosie, I hope you are satisfied with that response. You had his wakili at the High Court, advocate of the High Court. So it's actually true that you cannot come again to investigate once you have disclosed and even made payment for those taxes. So I'll throw this to Brian. Yes, Brian?
Just before we proceed, for the
Sure.
good of the general public, Wakili, this one for you. In the event that a taxpayer makes a disclosure and the commission realizes that there was some fraud involved, will there be a prosecution for that matter?
Well, that's a good question, because if you look at section 37D of that 37D subsection 12, you if you do not subsection 10, if there's a non-disclosure of material facts, meaning that, for example, the taxpayer did not confirm, did not disclose everything, then one of the options available to the commission has got about 3 options. One is to withdraw the relief, the remission of penalties. The other one is to collect any balance of tax that has now been determined to be due. Or the third one is to prosecute the taxpayer. And that's why it is so important as a taxpayer to make a full and frank disclosure, because if you do not make a full and frank disclosure, then the commissioner can prosecute you. Under the law, they are allowed to prosecute you. And that's why we're saying, if you decide to make a disclosure, then it has to be full. Lazima tukubali kwamba you are going to disclose everything. Otherwise, if there is something that you are going to hold back, then at the law, the commissioner is allowed to prosecute you under section 37D10. Brian?
Thank you, Akili. That was very smart.
Yes, that was very, very clear. So there are circumstances where you can get prosecuted or investigated for that matter, but under the conditions that our FCPA Robert has mentioned. So allow me to go to the next one from Nurdin. He's greeting us. Greetings back to you, Nurdin. So he's saying, and this one I'll throw to you, Brian. He's saying he applied for a penalty and interest waiver with regards to 2016 and 2017 returns via the KRA portal. 1 month later, seem to have lost it. And he's saying, and one month ago, sorry. So he's asking, does the amnesty cover this? And how long must one wait before getting a response? I am now a responsible taxpayer. Brad, can take the floor on this one.
Okay, remission is covered under section 89D, if I'm not wrong, of the Tax Procedures Act. The normal waivers, we call them, are very different from the remissions that we're discussing about. This one is remissions upon you paying undisclosed tax liabilities for the period between 2015 and 2020. So any other, let's say, if you had penalties arising from non-filing, late payments, and so on and so forth, that's a very different matter, and it's covered differently under the Act. For this matter, we are very specific. It's all about undisclosed or rather undeclared income for the VTDP period, which is 2015 and 2020. And the remissions are very limited. That is from 2021 and 2023. I hope I'm clear.
Okay, thank you, Brian. You are very clear on that. So there's a difference. We have the normal waivers where you didn't file on time and you got a penalty. So you can request for a waiver on that. But what you are talking about, like Brian is saying, is that you had some undisclosed taxes for previous periods. That is between 2015 and July 2015 and June 2020. And now you want to disclose these unpaid taxes to the commissioner. So when you disclose and make payment for those principal taxes, then you get a waiver. For this year, you are saying 2022, you get a waiver of up to 50% on those penalties and interest that will have accrued as a result of you disclosing these taxes to the commissioner. So there's a difference. It's not the normal waivers that you're talking about. I hope you get the difference, Nurdin. If not, maybe you can get back to us on the chat. We can take another one. I've seen another concern. And Felix, thank you for that link. actually, Felix has posted a link on our chat on where you can get more information on voluntary tax disclosure program. So if you can be able to go through the chat, there's one from Felix, and he has shared some links with the guidelines that you can on how to apply for this program. So thank you very much, Felix, for taking that initiative of sharing the link with us. Okay. All right. Okay. So so I can see there are quite a number of questions that have been asked and are not related to this call. I might need your guidance, my fellow panelists. I don't know if we can go ahead and tackle the questions that are not related to our point of discussion. Maybe let me get the guidance from you two. What do you think?
Yes, Cynthia, I think because although this was a VTDP, because we are on call, maybe for the next couple of minutes we can just answer them, briefly, and then I suppose if the particular person has got a specific question, then they can either reach out to Brian or myself or somebody else. Brian,
Thank you.
I don't know what you think.
Brian, yes?
Yes, I'm in concurrence. Let's for the few remaining minutes, we can hear one or two.
Thank you. Thank you for that. I think also it's important because it's important to get this information in as much as it's not related to our point of discussion today. So I'll just quickly run through the questions. Let me see. There are quite a number. So someone is saying, Daniel, what about deceased taxpayer? What happens to their affairs if they didn't appoint an administrator maybe to take care of their taxes? So let me leave it open to the panelists. What of a deceased taxpayer? What happens to their affairs? I think they're talking about their tax affairs. If he or she did not appoint an administrator to take care of their to handle their taxes.
Well, maybe I can just give you my views, and then Brian can add to that. So,
Sure.
if you don't have an administrator, then actually, if you have a will, you have an executor of the will. But if you don't have if you didn't have a will, then you have an administrator who would be appointed by the court. So, for example, your surviving spouse or your brother or your sister or whoever, your children, would be appointed as administrators by the court. And those ones would be liable for certain tax obligations with respect to that estate. Because, for example, if you're talking about rental income, then the administrators would then need to determine whose rental income is it. Is it now Robert's, and therefore do we need to register Robert for the tax obligation, etc., etc. But if you've got an administrator, then it's much easier, because the law also recognizes that they bear that responsibility on your behalf as the owner of the property, or the person who had the primary responsibility. But also it's important that deceased persons get deregistered, so that we can also clean up the tax base, so that like I've seen here, people saying, well, I didn't file my return and therefore I have a penalty. Now, if it's a deceased person, then they should really be removed from the register, so that we don't have those kind of challenges. Thank you.
Thank you, Robert. Would you like to add on that, Brian?
No, Wakili has clearly elaborated what happens when a taxpayer dies in estate or estate. I think I'm satisfied with that. The only problem, or rather the only question that we get, what if a taxpayer dies with tax liabilities? Wakili, can you please expand on that?
Well, and this is the thing that they say that taxes and death are certain. So if you die with liabilities, that liability is not extinguished. Actually, Kenya Revenue Authority has a priority in terms of ranking. So before you distribute those assets to the beneficiaries, KRA will come and collect, or should come and collect, at least according to law, should come and collect the taxes due. So if there are any liabilities that exist, the fact that you are dead really doesn't extinguish them. And this is the reason why we're saying KRA could go after the trustees or the administrators of the estate. Brian?
Right.
Yes, thank you for that. This was for the general public to know, so that they know that once you accrue taxes, it's for life, unless otherwise.
Right. Okay, quite some information there. So Victor is saying, how does a company that has not been able to make profits for the first 2 years of incorporation, but now they're in their third year of operations, where they are expecting some prospects of making profits, how do they go about their income tax? And secondly, it is in the third year of operations that an accounting system was recommended, purchased, and implemented. And now this is when the previous transactions are being cleaned and embedded so as to report profitability or loss position. How can this company be helped? It was quite a long question. I don't know if you, my dear, my fellow panelists, if you got the question from Victor, but it's there on the chat. I think we can be able to run through it again. So Brian, maybe I can ask you to go through this question again. So you're saying it's a company, they've not been able to make profits for the first 2 years of incorporation. They're now in their third year and they are seeing prospects of making profits. So they're asking how would they go about doing their income tax. And then they're also saying it's in this third year of operations that they bought some accounting systems, and now they're starting to implement transactions from previous years so that they can determine their profitability or loss position. How can this company be helped?
Okay, something I'm not getting from the question is saying that they're prospecting, or they're seeing a prospect of making income. The question is, have they been filing? What has been their position? Have they been in a loss position, or have they been filing nil, or have they been not filing at all? I'd also want to know, they want to correct their tax position from previous years. The law allows for taxpayer to do an amendment. So for that question, I think an amendment would suffice. And if there are any tax collectible, I think they should post that on their return and make payments accordingly. So maybe the participant should just clarify on the first aspect of the question so that we can give him a definite answer.
Okay. So Victor, maybe I can also give you a chance. I can unmute you and give you the chance to ask the question. Maybe it would be more elaborate so that we can get to understand, and also you can give us feedback on some of these questions so that we can give you a definite answer. So Victor, I don't know if you are in a position to use your mic, but I have unmuted you, Victor. Victor, are you in a position to use your mic?
Me.
Hello, yes, Victor, how are you?
I'm good. Thanks for the
Yes, we can
opportunity.
hear you. Yes.
Thanks for the opportunity. Now, based on in reference to the question that has been raised by FCPA Robert Waruiru, the company has filed nil returns for the past 2 months that it reported losses. But now in the 3rd year, we have prospects of making profits, and it is within the same period that we've acquired an accounting system where we are updating our data. And that is what is showing us the inclination towards profitability. So I was just asking, how do we go about this in terms of income tax?
Thank you, Victor, for that. Brian, is it clearer now?
Yes, from what I'm getting from Mr. Victor, is that they've been filing nil returns at the same time making losses. So those are 2 different things. You can only file for nil return with the tax payment of 0. So it means if you have been filing nil returns, it means that you've not been doing any business, and therefore you had no profits, and therefore your tax liability is 0 for the past 2 years. And now you are prospecting that you'll gain some profits. So my advice is, if you've started making profit, you should file at the point, or rather at the period where the profits were being realized. Let's say if it's 2015, you started realizing profits that year, you're supposed to file 2016 next year, beginning January, and so on and so forth. I hope I'm correct now.
Okay, thank you, Brian, for that. I hope that's clear to you, Victor. If not, maybe we can just do a follow-up question, because I think you are still unmuted. Okay. So maybe I can throw this to Akili. We have a question from CPA John, and he's saying, kindly clarify what is an in-depth audit, because every application calls for a full audit for the years under disclosure. He's saying that's his experience. So FCPA Roberts, clarify to us, what is an in-depth audit?
Yeah, so there are generally 2 types. I don't know, Cynthia, Brian, possibly being in KRA would have been better at place to answer this one. But my experience of audits is that you can have a compliance check, which KRA is telling you, we are coming to see whether you are complying. You know, we're just going to come and look at a few things and see whether you're complying, versus an in-depth audit where they're saying, okay, we want to come and look for the last 3 years POIE. We want to see all your POIE records for the last 3 years. We want to see your VAT records for the last 3 years. So they are going into a bit more detail, and hence the name in-depth audit, because they want to look at everything. This other one, they say, we just want to ensure that you're okay, and that you know, there are no major issues. Actually, for John, there are some instances where a compliance audit will trigger an in-depth, because sometimes they come and find that something that you've not been complying with, and when they look, they see that it's a problematic or it's an issue that has spread maybe for the last 2 or 3 years. So they may want to then do an in-depth audit, but generally speaking, it's just really how much detail they go into. And then for Victor's question, and I know that was a bit, it was a bit of a complex scenario. Another option that you may consider, in addition to what Brian has advised, is maybe, especially if the losses are significant, you may decide to file amended returns for those first 2 years when you had losses, because you are allowed to utilize your losses against your taxable profit for the next year. However, the catch is this. When you file an amended return, you are likely to trigger an audit. So I guess you'll have to then determine which one you want to do. Do you want to forego your losses and pay taxes on your profits from this year, or do you want to fully disclose everything and ensure that you can utilize your losses? I think that's a question that you'll have to decide. Cynthia?
Thank you for that. Thank you so much. I think if we start going the legal way, the in-depth and the not so in-depth, in legal terms, there is a lot of clarity that is needed. But thank you for bringing that out. And then maybe the first question that had come about a deceased taxpayer. So I think I don't know if it is a follow-up or it was the first question but the question is, what happens when rental income is being received for dead one's taxpayer? So the question is, there's some income that is coming in, but the property is registered under a deceased person. So what happens? They're saying the letters of administration have not been finalized. Brian, would you like to pick that? What happens when someone is still receiving rental income from property registered under a deceased taxpayer?
Yes, Okili had talked about someone dying, or rather having an estate. In KRA, you say estate files. The person is deceased, yes, but the property still still profits or rather incomes. KRA will still collect. KRA will still collect, or rather, I don't know if what he meant, but I think Okili was clear on that. Someone dying, they have a will, they have beneficiaries, they have people who still manage the property. So the estate continues, the taxes continue.
Whether or not the transferring bit has been finalized or not. Yeah. Because I think where they're getting stuck is they're saying the letters of administration, I think for them to now start taking charge of the property, those letters have not been finalized. So that the taxes do not wait, if I'm getting you right. So remittance of taxes, because you are receiving this rent. So remittance of that tax is important in as much as you're still waiting for the process to be finalized. Is that right, Wakili?
Yes, so the way this process is supposed to work from at least from a legal perspective is that somebody has passed on, then the beneficiaries, because there was no will, the beneficiaries go to court and they get what they call interim letters of administration, meaning that you are allowed to operate the estate or the assets of the estate without distributing. And part of that operation is this that even if the final letters of administration have not issued, that the question is, so who is going to that? The administrators, the ones who've been given that power to administer those assets by the court. Those are the ones who KRA will look to ensure that tax is paid. I hope.
Very, very clear. Thank you for bringing that up. So I don't know if you can get me how many more minutes you can take, because I think the questions are still coming in. But because of for the interest of time, I think we can pick a few more, and then we can now schedule other sessions to address. We'll group the questions and then set up. We'll set up training sessions to address those specific areas, because I can say there are quite a number that are still coming in. Some are coming privately to the host. So with your permission, I would like us to maybe handle 5 more. If that's agreeable with you, we can handle like 5 more questions, and then for the remaining questions, I'll like our participants to give us the go-ahead to schedule training sessions with to address these specific areas, because the questions are ranging from waivers to refunds to filing to now I can see even tax compliance issues. So they're quite many the questions. So if you don't mind, dear participants, we can actually schedule training sessions to address these specific areas, and then we'll invite you and we'll have also subject matter experts from these areas to be able to address all the questions that you might be having. If that is allowable, please allow us in the interest of time, because I'm sure even if we wanted to answer all the questions, we might not be able to. We'll just take a sample, and then if you allow us, we'll now schedule training sessions to address these specific areas kindly. So with that guidance, let me take a concern from Felix, and he's saying he met a hawker who's abled differently along Kenyatta Avenue. They exchanged contacts. He educated him about AGPA opportunities and the opportunities that are available for PWDs, persons living with disabilities. And since they have since managed to register a business and they need a tax compliance certificate. However, because this person had not filed his annual tax returns, he got some penalties. So he's asking, what remedies does he have under this program? I think we brought that difference out clearly, Brian, but maybe we can bring it out again. He's saying, what remedies does he have under this program? So you can bring out the difference between the normal waivers and what you're talking about, the voluntary tax disclosure program, the waivers that are granted under VTDP.
I don't want to sound harsh, but there are no remedies for him under this program. I said that this program is subject to the taxpayer disclosing income or rather tax liabilities from 2020 and paying them either in 2021, 2022, 2023. And the remissions are also different depending on the year of application. First is 100%, the second year 50%, the third year 25%. However, on this subject, what the taxpayer can simply do, just look for the normal waiver under Section 89. Just visit your nearest KRA TSO, go to the debt department, do a letter, and also don't forget to apply online. Once the commission is satisfied with the results that you listed down in the letter, you can, okay, because the commissioner is under discretion, the commissioner can allow you a TCC or deny your TCC. But for his case, in our practice, such cases we grant them TCCs, considering that it's just normal penalties, unless the taxpayer has other major issues. But for normal penalties, I can assure you that the commissioner, or rather the authority, is sympathetic, and we're very listening, we're very helpful. So my advice, just visit your nearest TSO and you'll be able to be granted a tax compliance certificate. Thank you.
Thank you, Brian. And by TSO, he means any KRA office that is closest to you. So you can visit your nearest KRA office and you'll be able to get assistance on how to apply for waiver. There's a question about DTA with Rwanda. Inga is asking if we have a double taxation agreement with Rwanda, if you can be able to maybe give an answer to her. Do you have a DTA with Rwanda?
No, the answer is no, Cynthia. We don't have a DTA with Rwanda. There was an East African Community EAC DTA that was negotiated around around 2007, but has never been concluded. However, there are plans to restart an East Africa Community negotiating a new East Africa Community double tax treaty that will be concluded. The 2007 one, the problem we have with that is that Tanzania and Burundi did not sign, but Rwanda, Kenya, and Uganda signed. So it was not capable of coming into force, and that's a problem, and that's the reason why we don't have a DTA with Rwanda. Cynthia?
Right? Thank you, FCPA Robert. Inga, I hope you've been answered on that. I don't think we need any further comments on it. So I can say I think we addressed this, but maybe we can clarify Brian for Daniel. He's saying, what about a business? A business that has ongoing investigations, can they apply for voluntary tax disclosure program? We talked about it, but maybe he joined in a bit late. You can clarify for Daniel, if a business that has an ongoing investigation, if they qualify to apply for VTDP.
Yes, Daniel, we talked about the conditions you should meet for you to qualify for approval of VTDP. You can just visit section 7D, the TPA. We said that you should not be under any investigation, any compliance checks, audit processes, or you've not rather any prosecution of any nature. So you must come with clean hands for you to be considered under this program.
Thank you, Brian. I think that is very, very clear. If you're still under investigations, you unfortunately do not qualify for VTDP. So there are many concerns about when our next presentation will be. And just to confirm to you, we have another session tomorrow, but now this one will not be on voluntary tax disclosure program. We'll have it on monthly rental income. So tomorrow afternoon at 11 a.m., we'll be having a session on monthly rental income, a similar one to this. We'll have a subject matter expert from rental, and we'll also have a subject matter. We'll also have somebody from the industry to be able to give us the experience from the public view. So we'll share the links to your emails. So if you'll have the time, you can be able to join us. But we'll also schedule another one for the gaps that you have identified from the questions asked. And we'll also invite you. We'll be having FCPA Robert as well. If he'll allow us, if he'll get the time, he'll join us so that you can be able to continue this conversation, because it's important for taxpayers to understand why we are paying these taxes, and why it's important for everyone to pull their weight into the tax bracket. So it's a discussion we'll have with FCPA Robert, because we don't take it for granted that you've joined us all the way from Mombasa, and we understand there's an ongoing session, and you've just excused yourself just to make yourself available for our taxpayers to get to understand this subject. So thank you very much. I beg to leave the questions at that. What as agreed, or as I've guided, we'll be able to schedule more trainings with regards to these areas that we've identified. So for now, I'll allow our panelist, FCPA Robert, to give us his parting shots, even as we wind up this session.
Thank you very much, Cynthia, and thank you very much to all the participants. We still have quite a number who have stayed on. Tax is an evolving area, and I applaud you as Kenyan citizens for just attending this session, just to understand your obligations and to comply with those obligations. And in as much Revenue Authority has in the past been a tough entity to deal with, I think we are now experiencing a much better team at Revenue Authority in terms of how they deal with taxpayers, and so it's only right and fair that we pay our taxes. So thank you very much. Please consider taking advantage of the voluntary tax disclosure if you've got any undisclosed income, and hopefully you will be able to do that before the end of the year so that you can access a 50% waiver. Otherwise, asanteni sana everybody, always a pleasure. And Cynthia, yes, I confirm that I will attend the next one once you organize it.
Thank you.
Hopefully I'll have better internet and we can have a better experience. Asanteni sana, and God bless.
Thank you. Thank you so much. Always a pleasure having you. And thank you for the time that you always take to be on our call so that you can engage our taxpayers and even educate them on matters taxation. Brian, all the way from Bungoma, the floor is yours. You can give us your parting shot.
Mine is just to thank the panelists led by you, Madam Cynthia, Wakili, Council Robert, and all the participants who avail themselves, created time so that we can educate you. And you can also ask us questions so that we can make this a better experience. We can get more ideas, and we can create an environment where all of us will pay taxes and make our country grow. Look forward to the next session. It was my first and I really enjoyed one. And I'll be a regular panelist if God allows us the time and the space. So just thank you all. Thank you.
Thank you. Thank you, Brian. Certainly, we'll invite you for subsequent sessions. We have this kind of trainings where we have webinars, the tax talk, and then we also have now the actual trainings where we give you a topic. And just before we end, I'd like to inform you that you are live on our KRA TV. So you can actually go to our website, www.kra.go.ke. For those ones who are asking us, those ones who joined late and would like to get this and many other presentations about matters taxations on different tax heads. So we have this live recording on our KRA TV. So once you log into our website, we have a tab for KRA TV. You can actually be able to access and you can be able to actually get this recording and many others. So for those who are joining late, that is the information I'd like to pass to us. So there are lots of thank yous coming in to our panelists. So we appreciate from Daniel, from Inga, from Felix, from Victor. So everyone, thank you for taking your time, our dear participants. We don't also take it for granted that you've spent more than an hour with KRA and with Wakili of the High Court, just to be able to get to know about taxes. So we appreciate so much for the time that you've taken to join us. God willing, we shall see you again in our subsequent talks, not just on voluntary tax disclosure program. There are many other topics that we need to discuss as we've identified on your questions. So we'll be able to invite you and then we'll be able to discuss more. Thank you, Akile. Wishing you a good time in Mombasa. You can bring us Madafu when you come back to Nairobi.
I haven't seen them, but I will look for them.
Thank you. But you can get a chari. I am told there are charis in Mombasa.
Excellent.
Okay. Thank you. Thank you. And thank you also, Brian, all the way from Bungoma.
Very much, Cynthia.
Thank you. Thank you so much.
And thank you, everyone.
Thank you. Thank you, everyone.
Thanks so much.
Thank you. Have a good evening ahead. Thank you. Tumemaliza?